Okay, good. Hi, everybody. I'm Harry Boxer, the technical trader, and thanks for being here. Today, I'll be answering your questions in depth in terms of analyzing the trade technically. Let me just quickly show you. This is our website. That's me. And when you come into our site, there's a free 10-day free trial to sign up and check out our site. I think you'll be pleased with what you see. We're purely technical, and today I'll be showing you an example of some of my work. We'll start off by answering some questions. Right now, the first thing I have is TLT, which is obviously the Treasury bond. First, let's look at it on a long-term basis. You can see that it's been a long-term downtrend from 152. If you go on a weekly basis, the best way to analyze it would be doing that. This thing had its high back in early 20 when it reached all the way up about 180, and it came down in half over the next couple of years to reach the 83 mark. Now, what I really like about the way it's looking of late, after a 1, 2, 3, 4, 5-wave basic Elliott wave decline, on a long-term basis, we took it from 178 to 83. You'll see that move off the low came with pretty good volume and good technicals. It also broke the declining tops line and moved out of the downtrend per se. It ran up to the 50-day moving average and pulled back and had a little bit of consolidation here, and that's really what it's undergoing right now. For me to say where this goes, should it get above 100? I think your next target would be 110, 115 zone. And then beyond that, further down the road, 122 to 124, something of that nature. And I do think if interest rates come down, that will be a place where that might go. And your current support is about that 92 range, give or take a point. Moving over to GDX. Which is the gold ETF, gold miners ETF. On a longer term basis, this is weekly. You'll see in 2020, and it got creamed with the market. It went all the way from 16 to 45, nearly tripling in about 6 months back in 20. And then it stair-stepped its way down, bounced, and consolidated in that zone. But it really broke down in 22 when the ETF dropped from 41 to 21 in half, basically. And then at a 3-wave corrective move up. But I was at that point really optimistic that this would reach the lateral price resistance up near 41. But we went into another decline in a little mini Elliott wave, 1, 2, 3, 4, 5-wave decline, which did take out support only for a day or so, or actually for the week, and then ran back up again. Let's transition over to the weekly chart, daily chart. Excuse me. You can see now that after 5 waves down, an inverse head and shoulder pattern developed. I was optimistic about this on this day when it broke out with volume. 41 million traded that day, but it could not even get back to resistance and backed off. Now, it did form a new rising channel and ran up to resistance before backing off again, right now, back on that rising channel support. And any further damage on this, and I think gold and the GDX may be finished, but this is the point where if it holds, it has a chance of moving back into the 32, 33 range and longer term mid-30s. Now, if anybody else has a question or symbol, anything that you're interested in, let me know. And David, I'm not seeing any other symbols. Is that right?
Yeah, not yet. So yeah, everyone, if you can hear me, go ahead and post some more symbols or questions.
In the meantime, I'll go over today's action in the market if you'd like, because until we're waiting for somebody.
Yeah, if you have any ones of your own that you want to talk about, or if you have like
and nothing in particular because I do more day trading, but NKTX was a terrific day trade. When you look at the overall pattern, you had a big rounding bottom, a breakout, and a spike up and wedge. Now, this wedge was the key to me, and I told my subscribers over the weekend, if you break the wedge, it might be a terrific trade. But boy, I didn't think it would do what it did do this morning, breaking out here in the 5.5 range, 595, and doubling to 11. 1117, 1119 was tagged a few moments ago before it pulled back. But an example of some of the things we watch for, even after it had that big run and formed the coil, I told my subscribers, if you break out here, it's another day trade. And sure enough, we broke out above 942. And from 942, went up to 1122 for $1.80 in literally half an hour or an hour, less than an hour. So a really nice trade there. Another idea this morning was Nexi, which broke out and ran. Now I'm going to get back to you guys and start talking more about some of the symbols that came in. David, suddenly that box disappeared and I can't find it. This is really bizarre.
Just hit Alt H on your keyboard and it should pop up.
There it is. Okay, great. Thank you.
Mhm.
Well, let's start looking at some symbols. And we'll start off with, it looks like Bitto. This is a cryptocurrency related ProShares coin ETF strategy. Now, when I looked at this chart, it was obviously pretty ugly, and then it ran up and double topped here. That's the breakout, that's the retest, but it didn't look good when it was breaking down here. On the other hand, when it broke back out above the moving averages, which were crossing over right there with a pop that day on big volume, that was a breakout point. It then ran up and flagged, ran up and coiled, and then something interesting happened. Resistance became support. It broke through with a breakaway gap, pulled back, formed what I consider a bullish coil again, and is currently in a very strong rising channel here that indicates that, look, if cryptocurrencies aren't done yet, the projections on this are 24 and 26 and a half. And those are your next targets, and BITO, and obviously must stop under 20. 1990-20 is key support. We break that, the trend is over on that one. CTSH, a stock I followed for years, Cognizant. Obviously, had an inverse head and shoulders here, broke out and returned it, and then worked its way higher again. This pullback got to what I consider a long-term rising channel bottom right there. And at a V bottom with a right hand extension, when it broke through that line, and then took out the 50, that's where the stock was bullish again. And so it ran up and formed a flag and popped and formed a three-wave corrective. Note where the bottom was today, right where that prior high was. And prior highs, when broken, become support. That's exactly what happened here. Now, if you want a projection on this one as to where it might go, there is some resistance along this zone. But my take is that the 80-82 zone is your next target for CTSH. So the overall pattern is something I do like. I don't do futures. PGTX, one of my favorite bios. We were long this one when it broke out back in 23, going from around 9 into the mid 30s. So it was a 250% gain and a beautiful 1, 2, 3, 4, 5 wave advance. But after 5 Elliott waves and a big move that saw it go from 5 to 36, it got hammered with some bad news back in July, hammered it down, made lower lows. Now, the breakaway gap occurred there, which put it above the moving averages. It then formed what I call a pullback falling wedge. And then it popped and broke out. Then it flagged. So net, the stock's been in a beautiful uptrend. It just recently broke out of a 2-week coil pattern right there, got very quiet near the trend line, and then popped. My near-term target is 24 and then 28. Those are my 2 short-term targets. Longer-term target, mid-30s to retest that high. Up next is, we got a couple others here. Upwork, which is a current swing of mine. Love that chart. The long-term chart is impeccable. Let's take a look at this run it had. It had a beautiful 1, 2, 3, 4, and a truncated 5th wave, but triple top. Broke down, spiked down, and worked its way higher to where resistance was and backed off. The retest was successful, about a 50% retrace. It then ran up, formed a perfect flag type consolidation over a 2-month period. And today was a real pop. It gapped up from a close yesterday at 1405, opened at 1436, and ran to 1568, and currently and finished there at the high for the day going away. So if you're asking me about this one, JC, this looks terrific. The next target is 18 and a half, 18 3/4. And finally, Upstart, which is a tech trader swing as well. Excuse me. Yeah, UPST broke out of a base here, but a swing on it, consolidated for a week, pop, and pull back. Now it did break down back to the 50-day and back to the breakout point of the base. This is critical and must hold in this range. Your stop would be under, I would have to say, under 31.5. You're out, or 32. If this is the formation of a new rising channel, then the longer term projections on this one would have to be for a retest of that high, 49, and then 59. So I hope I answered your questions on that. Now, CP. Now, CP looks pretty good in here on a long-term basis, but this is a railroad, and I can't get excited about it. Nevertheless, over a 3-year period, a base like that could afford a big move. But the short-term resistance is 80. The intermediate resistance is 85.6. So that's going to be your short-term targets. And the support right now is about 75.75, 76. But not exciting. But nevertheless, there's your take. In the case of Albemarle, which is I believe, related to lithium, we had a massive move up, a massive head and shoulder top, and a breakdown. This is a very negative chart. Now, recently, it broke out, moving averages crossed over. So if it manages to hold around 132.3 where it is, your next target is 165.68, and then eventually the declining top line at 182.85. That's my take on those. Well, NVIDIA is a monster. We all know that. This was, believe it or not, a swing trade of mine, and I'll show you where you won't believe it. When it broke out right there at 39, that was adjusted for split. Subsequently, you can see what it's doing and what it did today. Only up 32.63 today. Now, this morning, I told everybody that if we break through this double top area, it could fly. Well, take a look at what happened when it broke out above resistance. Hard run. As a matter of fact, at 12:30, you could have bought this at 5.11 and it finished at 5.23. Net up 32. That's chiefly the chief component of the NASDAQ 100 right now in terms of the way it moves. It affected the SMH, the SOXL. These are all ETFs, and the TQQQ, all with sharply rising patterns today. And so NVIDIA is a stock that, projections-wise, I'm sure that's what you're interested in. I have to give you a number that will astound you. It wouldn't shock me, by the way, if this stock split yet again. But I got a target at 950 long-term and a short-term target at 595, 600 in that range. How is Tesla looking? Well, I would say it isn't one of the better ones. As a matter of fact, it did have a big reversal day here off of 265 and came down at 234 and losing 30 points right to the 50, right to what I consider potentially a parallel trend line. So if it does hold here, then I'm going to need this to get over 246 with energy, take out that level where there's moving averages as well. And then you're on your way to 260, 270, and maybe my longer term projection is back up to 290, 288, 290. It looks okay. It just looks okay. Generac, boy, I like this company, but I didn't like the chart for a while. However, it sure looks better now. Here's what I mean. Generac was one of my biggest winners ever when it was trading in the 30s. I think it was 29. And it went up to 500. That took about 3 years. 20-fold. But then a 1, 2, 3, 4, 5-wave decline, and now multiple retests and even a slightly lower low here. But what I like about this, I call this a V bottom with a right-hand extension. The moving averages crossed over. The stock worked its way up to the gap. Now, believe it or not, this gap and this pullback low and these highs are now the key resistance to this stock. Over 133 with energy I would look for 150.55 or more. I really like the way this looks, provided it doesn't break there. So I would stop this one under 110, 111 if it should fail that much. The Goldman Sachs, obviously the gem of Wall Street's financial district. And when I say that, I mean in that they're a leader in financial services and banking. And so, and probably the most respected. One moment. Yeah, the all-time high was reached back here in 21 at 420. And then it reached 426 a few weeks later. For me, my target has to be 420.25. But the fact that it popped out above the base, surged, and now it's flagging tells me it's likely that if the market does anything the next week or 2 or 3, this might quickly be 420 plus. So I'm looking for 30 more points on GS. Option play there may be interesting. Again, I don't analyze futures, so there you go. Could I chat about the scan I use? This is TC2000 charting software. There's a multitude of scans that you can use that are built in. But I basically look for new 52-week highs and percent gain leaders over the last month or so to give me an idea of stocks that may be moving, breaking out, and advancing. So that's no secret. It's easy to do that. Elon, this is an interesting chart. Looking to look at Elon, obviously a big drop from the mid 30s down to the mid single digits. The actual low was back in June at 790. It ran up to 12 and change and pulled back and retested and ran up again. Double top was broken here. And this is the big day in this trend, in my opinion, right there, where it went from 1265 to 1381 and 8 million shares. That was a breakout. And since then, it's advanced all the way on near 16. And my target is 18 and a half. CELH, really good company. And I spotted this one down here before the split when it broke out of this base right there. Beautiful runner. All these lines really mean that stock is a 2-for-1 or a 3-for-1 split. But let's look at the pattern as is right now. In essence, long consolidation coil post-split. Let's put it this way: on a recent run-up, if we get through 60 to 60 and 63 are resistance, and then I would look for a retest of 69. Longer term, the way to analyze something like this is to connect the tops technically. You got a beautiful parallel channel, or close to it, not quite parallel. But you can see why, after a period of consolidation here it ran, and now my target is, if this thing does what I think it can do, I would look for 85, 88 over the next few weeks and months. PNC, that's the bank. Really nice chart. A beautiful base. The only problem with this one for me, this is a ton of resistance in this zone where it spent about a year backing and filling between the 150 and 175 zone. So it's going to have to get up through that area. Easy stop, though, for me. If it pulls back under, say, 148. The target at 173.34. Oracle. Well, I'm not in love with this stock. I liked it here, but as soon as it broke down with a breakaway gap and rallied and rolled over in a 1, 2, 3, 4, 5 wave decline, I'm not surprised that it bounced. But the problem I have now is this looks like wave 1 and this looks like wave 2. Now, I'm not saying Oracle is going to collapse or anything, but your stop should be under 100. Under 100, it falls apart. What I need to see if you want to get bullish, is to move back over 110.12. And then your targets would be 117.5, 124.5. RX, really hot little stock. Obviously, if you look at this chart, you'll see that it double bottom popped, coil broke out and retested. What's going on there is a new rising channel. Where can that go? We're at the channel top in a 1, 2, 3, 4, 5 wave move. So there's a possibility it may have a deeper retrace or longer consolidation. But if momentum carries it, the next target is 16.5 3/4. Longer term, 21. MAMA, Mama's Creations. Sounds like a food. It is a food company. Now, stocks tend to move in 45-degree angles and in channels. They just do. Target 7 3/4. That's 50% from here. This looks very good. Is there anybody else that has some more symbols? Because that's what we're all about here today. Amazon. Well, overall, I still like Amazon until and if it breaks down here. I don't want Amazon under 142 3/4. I think that would be very negative for the market, kind of head and shoulderish if it breaks down. What Amazon needs to do now is take out 155. 155.5 3/4 is resistance and your next target. Longer term, if it follows this channel, and if that's a 1, 2, 3, 4, this is the fifth wave. If the fifth wave isn't done, 170.75 zone is my target. And you can stop half under, as I said, 142.3 and dump the rest if it gets under 139.5. That's where it gets dangerous. COF. Capital One Financial. What's in your wallet? All right. What's in your portfolio? Let's see. Nice base, a nice breakout, as many of the financials have. It's a 1, 2, 3, 4 affair, meaning I'm looking for a fifth wave, and likely it takes a move to 144, my next target. Maybe, if momentum really carries it, 158.60. There. But you also want to pay attention to gap and price support at 127. No, I'm wrong. Support is 126 3/4, 127. And notice this little platform there, that is a bullish flag type pattern that says we are going higher. That shouldn't hurt the financial, should it? Well, here comes Apple. Well, today was a really significant day for Apple because this stock looked really bad. When you break down from a platform and we do it with a gap on Apple, that large a gap, and then take out support the same day, I wasn't not surprised to see the stock drift lower. What I was surprised is to see the bounce today. But I'll tell you what right now. If this doesn't get up to the gap at 188.45 and then fill it in the low 190s, then if it fails at 188.89, the one-day wonder reversal won't be meaningful. What it needs to do is get a quick follow-through like it did here and resurrect not only its trend, but the market itself. As you know, a major component, if not the major component. Costco. Well, $600 stock. And what does it look like? Well, on a long-term basis, my projection is 975. Okay, on a shorter-term basis, 750. This is one powerful looking chart. It has had a good run recently with a good earnings report too, when it went from 540 to 682. Now it's kind of flagging. And it's always vulnerable when a stock's had a big run and it starts to flag because the flag could roll over. But it looks positive. The OBV looks good. Underlying technicals look good. I would hold the stock for more. Well, Joe wants to know about 4 different stocks, so let's go over them real quick. Core, which I've been following for a long time, it's a pretty choppy stock. I don't like the pattern. I do like the short term. The overall pattern may be limited because of this. It's right at key resistance and it's more above. But this base breakout suddenly looks good. I would want it to not break down underneath 40 and I'd stop on 40. If it extends, you should see 50, 51. So again, short term, hold 40, take out resistance at 45 and 3/4, and make a run at 50, 51, maybe 52. ILMN. I like these patterns when they have long downtrends. You can see the long downtrend. They pop to resistance. This one broke out. I like the look of this one. I think it's got a nice channel. My target's 158 next. EDIT, I know well. I didn't like the breakout here. Maybe, just maybe, it can hold it right there. If it does, because this was a tech trader swing and it broke down. If it does, I would want a quick move back up to retest the double top at 11 3/4, and then further on 13 1/2. But it better not break today's low. That's where I'd stop under 8 3/4. And Paramount, PARA, similar pattern with a run up and a pullback to key support here. So in the case of Paramount as well, I want 13 3/4 to hold. My target 17, 19 1/2, and 23. UNH, big healthcare company. Massive overhead resistance right there. Multiple tops going back a couple of years. If this should be fortunate enough to take out 555, excuse me, you might see a run that takes you up towards 600 or better. The current double bottom here is long-term support. So you can see that for a couple of years now, it's been in a trading range. What I'd like to see is if this is the rising channel now, that it holds that channel and works its way higher. 1, 2, 3, 4. If we do get a fifth wave and a breakout, 595 is my target. Agilent, similar there too, because it's got a V bottom with a breakaway gap, run up to resistance from this peak. Now I'll pull back to support. So Agilent looks pretty good to me, but this key resistance at 140.41. Get through that, you're looking at 155 or better. What's my outlook at marijuana? All you have to do is look at Tilray and some of the others to see how overly depressed they are and how low they are. It's too early. It's too early for me to say I'm bullish on the marijuana industry. I'm not. Up next is Facebook Meta. Gotta admit, as much as I don't like this company, chart looks terrific. And this looks like a 1, 2, 3, 4 with a fifth wave target of 375. That's my near-term target. Disney, Annie Kinnison wants to know about Disney. Well, long term, it's pretty ugly, but it's turned a corner, in my opinion, for two reasons. Technically, when you see two gaps in a trend, one breaking out through the downtrend, another breaking up through declining topside, and then pulling back right there, I would say the measure move on Disney here, let's call it 79 to 96, 17 points. I would look for about 106.7 on this next target. Right about there. When analyzing that, you'll see there's also resistance in the zone. So that's why 1067 might be an interesting option play, buying the 92.5s or 95s on this one. Up next, the Biotech XBI ETF index. Excuse me. Finding a cold here, folks. Okay, so you can see multiple tops in this area and a big run up. Now, I'm not saying biotechs are done. The momentum is phenomenal, especially today. But is that a blow off or is it an extension? The target's 97.5. And then I'd look for 106.7. And I would definitely stop under Friday's low, under, say, 87 out. PH for Mr. Maurer. PH got a good chart. The Parker had a fit, sure. Well, nothing wrong with this channel, right? Nothing wrong with the trend at all. The new projection, Ken, I would have to say 490.95. Then it's going to be a little bit overbought and at the top of the channel from a pure price standpoint. But a beautiful parallel rising channel on that one. Palantir's a stock I follow closely. Had a good day today. Nice reversal, but this one I don't look. It was a tech trader swing, but it broke out here. Beautiful run up, pull back, wedge, breakout, falling wedge, and pop. But this is a head fake because it did not follow through. Instead, backed off. If you're going to be following this closely, you got to be careful because it's already broken into the gap. It might fill that gap, and it might be down to 14.75, 15 for not too long. If it doesn't follow through, now note that this declining tops line right here, resistance to 17.25. I need a follow through for 17.25 and then 18, and I need volume. We don't get volume on this move, it's vulnerable, so be careful. Do I like it technically? Not as much as I did a while back. Symbol MLI. And again, Mr. Mara wants to know nice chart. Nice chart. Multiple waves up, however. 1, 2, 3, 4, 5 waves up. Have me thinking it's a little extended. It might have a deeper retrace. The key long-term support is 44 and 41.5, 2. A move below this level is an absolute out stop. Where can it go, though? Well, there's a pretty powerful long-term chart pattern. It's for me. The parallel channel top says we may see mid-60s on this one in the next few weeks and months. So that looks pretty good. Home Depot, HD. Am I doing your whole portfolio, Mr. Maurer? Okay. That's okay, too. I don't do these too often, so take advantage of me when you can, especially when it doesn't cost anything. I just want to reiterate, we have a 10-day free trial at TechTrader.com. Just simply go to TheTechTrader.com and check us out. Start a free trial. Put your stuff in. No credit card necessary. And enjoy my service for a few weeks for free. 2 weeks. Okay, let's move on. NFBK. I don't know what this is. Oh, a bank. And it's probably thinly traded. Well, let's look long term. Not a very exciting chart. Long-term resistance here. Long-term support here. 1, 2, 3, 4, 5 waves down. And a reversal. What I'd like to see ideally is some sort of pullback in that zone, 11, 11 a quarter, and then a breakout over 13. Once you see 13, you should see 16 and 18 and a half, 3/4. Hold on a moment. And Berkshire Hathaway, you want the B stock. Well, what can I say? Obviously, it's one of those long-term plays that just keep going. My next target, 445. Simple as that. And the key short-term support, stop under 330. Microsoft, which I follow religiously. Great chart. And what I really like about Microsoft, out of all the charts we look at, NASDAQ Generals, is that this has had a big run through a double top. And it's been coiling here for what, a month, 5 weeks, setting up for a move that conceivably could run this one to over 400. Next target, I'm going to go with 415. ServiceNow, NOW. Similar pattern. And when I say similar, I mean a run up, a breakout, and a multi-week consolidation. Yeah, I mean, long term, and here's what you want to also look at. It's the all-time high, and we're right up in that zone. So any move through here, and it's an $800 stock, in my opinion. CRWD current strike. A beautiful run up, breakout. And now I'm looking for this to extend, retest the all-time high. That level is about 300, 295 to 300 estimate. EW. Edwards Life Sciences, interesting company. And it was doing great for years until a couple of years ago it started coming down. This is what I'm concerned about in a stock like this. You know, when you make lower lows, you're in a large falling wedge. You could easily snap back. I do like the three bottom. With the right hand extended, it's actually a left-handed extended. Excuse me. And the pattern right now shows that if it pops here, it might run up towards 82 and 87. So 82, 87, and 92 are your next targets. I would have to stop it under, let's say, 69 and a half, in that range. CUBE, it's another good looking tech stock. Oh, no, it's not. That's real estate. That's right. I was thinking of Cubic, different company. Well, with the triple top back in early 23, and then the big drop, coming back up in that area is going to be resistance. So Cube, it's got to get to 48 and a half, 49 for me to say it has a shot in mid-50s. Intel, I really like Intel long term, and I have since it was 28. When this stock broke out of this base here, I said, watch this one for a long play. Well, it came down a three-wave corrective. It didn't help anybody because the timing wasn't good. But from 27 to 52, you'll be doubling in less than a year. Terrific move on this one. And where it goes from here, I think, is 56. That's for Annie Kinnison. I'm not seeing any more questions. David, was that Control H? I popped out of it again. Anybody else with any questions?
Yeah, it's Control H to bring up the,
I did that. It didn't work.
or I'm sorry, Alt H.
Oh, that's the problem. There we go. Sorry about that. Okay. Okay, we got questions for Pat on TTD in Burlington. Trade desk. I think it's a dangerous pattern. It had a beautiful run up. It got a double top to 91, and then came down. And unless it gets back over 78.5 with energy, there's a chance that this stock may see lower levels. Now, there is some support here in that zone, but it's not, and the underlying technicals don't look great either. So for me, I'd pass. There's way better looking charts. Burlington's looks great. Long-term downtrend that took it back to 227. It cut it in half basically, 227 to 114, I think it was. Breakaway gap, rising flag, in a beautifully conducive rising pattern or channel. Institutions love this stock. I need to get this one over 198 to get it running. The target is 215 and then 230.35. Keep in mind the 235.6 range up here. That's one of the reasons why that would be a target. Cisco, not a good chart. Sorry, folks. It was a good looking pattern there. But Teresa, got to be careful on this one. And I'll tell you why. 1, 2, 3, 4, 5 wave down. That's fine. And of course, it bounced. But if that's the best it can do, it may be in trouble. And I'm not saying it isn't a good chart, or, I mean, a decent pattern. But notice this here, these lows in here, is where resistance is. And the 50-day moving average is there. And what else is there? That's right, the declining tops line. Until I see this over 51 with energy, and it's not that far away. If you can do that, there's a chance of being into the 54.5 range, but that's going to be the next tough area. This is a heavy stock. Better charts out there, folks. Better charts out there. XOM, not a good chart either. As a matter of fact, I think the oil group is in for a rough time. If you want to own it, that's fine. But what I want you to do is stop under 97. Okay? You're only 3 points away. I don't like this pattern after a big long run up to have a topping pattern like that. Now, it could be consolidation. You're going to need to get over 105.5 energy before I even touch this stock. And today was not a good day. Now, Dell is a tech trader swing, and I'll tell you why. When it broke out here and pulled back, I said this is a nice setup for more upside. It went from 68 to 80, or just about 79.67. 80 was my swing target. The next target, 88. Great looking chart, no doubt about it. One of my favorites. James Mitchell, you got a good one there. Now, Hillbilly Jim to everyone. TLT, we went over earlier. I'll do it one more time. Long-term downtrend is broken. Went to 5 wave. It ran up the resistance and backed off. It has to hold 92, and it has to take out 100. The target is longer term, 109.5, 115, and 123.4. Joe definitely wants me to go over the whole portfolio. Joe, SKLZ, I don't like this chart. It's in a big downtrend. There's so many better ones. Maybe if it gets over 697 with volume, if you get through here with volume, I'm interested. And it isn't a bad basing pattern. Moving average are crossing over. It's consolidating nicely, but I need the breakout. Schwab, very nice pattern along with all the financials. Back up to resistance here. We get through 72, your target's 82. And I went over TTD a few moments ago. LLPE, educational stock, I believe. Yeah, Grand Canyon Education. Well, the good is that it's pulled back to the trend line. The bad is that it 1, 2, 3, 4, 5 waves up, taking it from 73 to 145 and doubling. I'd be really careful with this one, especially if it breaks 119. That's where stop. FFIV, decent base pattern, a nice breakout. A big gap here is resistance, and it pulled back from there. Overall, I like the basing pattern. Could they say the bigger the base, the bigger the move? I wouldn't be shocked to see this back to 200, even as high as 215 over the next few weeks and months. Not too bad. Marie Roy wants to know about Madrigal and CELH. Well, I went over CELH before. Let's go Madrigal right now. Again, massive move in December on news. Multiple weeks of consolidation, but then it really got hammered back. After reaching 322, it lost 2/3 of its value, down to 119. Since then, a reversal, taking out a 1, 2, 3, 4, 5 wave Elliott wave, basic down channel, breakout above the moving averages, a nice run up, and now a consolidation. I like the look of this. It's a nice wedge and a good setup for more. I wouldn't be shocked with a move to 300. That's my next target. In between, though, you do have 235 and 270. I'm sorry, 270 and 300 are your targets. EXC, short targets. Indeed, that looks like a short. And here's why. There's a couple of things to consider. The long-term pattern shows we're at support. If it ever breaks here, yeah, it's going down. I would target 30.31 and 27.5 3/4. Got that? MJ, well, it's a marijuana ETF. Jim Fisher's wanting to know. Okay, here's what I'm seeing. Obviously, we had that big move in August, September when the legislation was about to happen, but I'm not even following it, so I don't know. Because I don't like fundamentals, I like technicals. If MJ takes out 350.55, and it got up to 355 today and back way off, but that's what you need to do. Take that out. Once you do that, 4 and 4.7 area targets. Not bad. CRM or Pat B. Nice chart. Long term, 1, 2, 3, 4, 5 waves down. Reversal, sharp run up and wedge. The measure move in this one tells me we're going to retest the highs around 320. If it pops 265 with energy. Keep an eye on that one. Looks pretty good. My favorite 3 charts. Well, it's interesting. I got a call from one of my institutional clients who here's an interesting little low price thin stock called Koya. Base breakout flag. Look at the 1, 2, 3, 4. I think a 5th wave coming. I'm looking for 11, 15, and 20 long term. But when I say favorite 3, there's an awful lot of stocks I really like here. And if you got to come into my site at thetechtrader.com, sign up for a free trial, and you'll get a lot of information about swing trades and what I like. There's a top 20 list. I just put out a top 24 for 24. Come into the site, you can access that as well. You're welcome, Joe. BRPHF. Joe, look forward to maybe seeing you on the site. BRPHF. Rohalski. That's a good base. When the stock has done this, it breaks out, there's always a chance it's going to extend. My problem is all the resistance up here. Take a look at these lows that were broken in there, and that's resistance just ahead. So I'm not excited about this one, but the 10 3/4 is your next target, which is substantially above where it is now. NVIDIA and Mara. Well, NVIDIA we went over is dynamite. And I think it's going to much higher. Mara, a really interesting Bitcoin crypto related stock that's had a big run. In October, this stock was $7 and it more than quadrupled to 31.30 and a 10-point drop and it reversed. I got to tell you, if you're looking at a 15-minute chart, check this out. This looks like a left shoulder head and a right shoulder. Key support and stop is under 22.25 3/4. You can see it's right at resistance. It's not going to explode back to 31 very quickly. Longer term, high 30s. Do you do day trading? That's pretty much most of what we do there, although I publish swing trades as well. Again, you come to my site, you can access all the day and swing trades. IBM. Short? I wouldn't short the stock, not yet. There's too many other better looking shorts. Go to my box of shorts list. You want to see shorts? AEHR looks very vulnerable. I love the stock for a while, but I think it could be a stock in the high teens and mid-teens in 22. CMT, breakdown, bear flag. This looks lower. NTES, breakdown, rising wedge, and rollover. CHX in the oil group is very weak. Jill is a new tech trader, swing short, going down to 22 and 19. XPEL looks like it could dive as well to 40. Walmart, believe it or not, unless it really runs back up here, it could roll over. LNTH, a tech trader, swing short. CSPI looks like a vulnerable top pattern as well. Liquidia, look at this. Looks like it could be plunge on that one. So there's a lot of tech traders swing shorts and day trade shorts, but mostly we day trade long. Azrir's here, one of my favorite guys. He said he's been part of it for a year now, nothing but support. You're right, you got it. Okay, let's move on. You can go here. To thetechtrader.com, click on start a free trial, put your info in, no credit card. I'd appreciate a phone number so we can contact you if there's a problem. But anyway, that's the bottom line. Thetechtrader.com. Okay, let's move on and try to get some more people in. Win, the gaming stock. Beautiful chart. No reason to assume it's going down until it does. I always say that to everybody. If the trend is your friend, until it changes, it's going in the direction it's going. Is it at the top of the channel? Yeah. Has it made a move from 82 to 97? Yeah. Can it go higher? I think it can. Question is, to what level? Well, now that it's broken this downtrend, and I do like that, the natural target would be around 101 and then 110. Las Vegas, similar base breakout. My targets would be 55 and 59. And David, I think that's it. Not seeing any more questions. So once again, folks, I'm going to call it a day, but you come to the techtrader.com and look at my pretty picture, and then you'll, you want to be a free trial member for a couple weeks or 10 days, I should say. Start a free trial. No credit card required. Put your stuff in. Come on in. Enjoy the run. And a lot of people tell me that in the 10-day free trial that they're in there, they make enough money to cover a year or two of subscriptions. So that is it for me. There are some more questions. I'm going to take a few moments. KMI. Kinder Morgan oil. Lackluster chart. Going nowhere. If it breaks out its pattern, it could run. Then say 20 and 22 are targets, but that is boring. Q. Look, you might as well. I look at the S&P and NDX. I strongly believe the market has more to go, and if it does, you may run up into that 435, 45 range. You may go as high as 475, 85. Tough call as to when. SPY breaking out. It has to retest the all-time high. 479, almost 480. That would be the first target, around 479. Beyond that, maybe 495 to 500. THX. I think that was a thanks. You're welcome. And let's see what else we got here. Teresa Williams. Thank you, but you're welcome, Teresa. All right, that will be it. And that is it for me. Thanks for being here, everybody. Appreciate your time, and look forward to seeing some of you in the site. Again, it's thetechtrader.com. Have a good one, folks. Talk to you later. Bye, everybody.